Hello and welcome to another update video about gold. Certainly one of the more interesting markets at the moment. It did get very boring here in this sideways triangle that we were tracking throughout July and August and September. It then saw the breakout into the expected direction, and we're now sort of in the middle of the support zone that you would normally expect for a wave 2. So I often say that in a wave 2, I expect the price to go down to the 50% retracement level at least. That is normally a very general statement. If we talk about the metals, well, especially gold doesn't always do this. In this case, it did. It did even break below it. That's fine. That's just the region in which you would normally see a wave 2. But already the A wave retraced to the 38.2 retracement level, yeah? So this was the moment from when we started to track a low could be in place. But I indicated to you here that it's most likely just a B wave and we would likely come down again. And this is what happened. And we're now in this support range. We still need to be on the lookout for potentially lower lows. However, I can now count a potential 5-wave impulse to the upside of the, what was it? The last week's lows. Friday, wasn't it? Yeah, Friday lows. So I can count the first 5-wave move up, and we can take a look at that in a minute. It is basically this what we would like to see in the most bullish interpretation that we have, eventually targeting sort of around about $2,500. I've got this support region which goes down to 1719. This is just showing you the standard Fibonacci retracement levels for a wave 2. 1798 and 1719 would be the next major Fibonacci support levels, but it doesn't need to go down that low, okay? So basically the idea was we go down lower, we break the triangle to the downside, and then we're going to watch for an initial 5-wave move to the upside that if we get a pullback afterwards, we could use to go long with a tight stop. That's sort of the approach, I think, that makes sense. Do we ignore that something much more bearish could be playing out? No, of course not. I mean, that's essentially why stop losses are so essential. I'm not going to confirm to you yet that a low is in place, can still go lower, and below 1719 we have to expect completely new lows, possibly even below last year's lows, okay? So that's my method of tracking a bearish scenario. We're tracking the relevant support levels. If they break, that's a warning that something much more bearish might be playing out here, and I will give it a chance. I will give this wave 2 a chance, probably all the way down to 1719. Now, let's zoom in. So the idea is, okay, what happens if the low is already in? Well, we should rally in a third wave, to be honest, towards the $2,000 region and higher. Let's go to the 15-minute chart. I explained to you in yesterday's video that so far we had 3 waves up, and that one more high could give us 5 waves. Okay, and this could still stretch a little higher, but we can count 5 waves up. We've got a 1, a 2, this could be a 3, yeah, and then a 4, and this could be a 5. It's certainly a valid 5-wave move. There is no overlap between waves 1 and 4, and it's okay. What I don't like are the proportions, so I don't trust it. Okay, we don't trust it. I don't trust it because it's still in resistance. So it's the 1896 level is the pivot point for me. It's the 50% retracement level of the decline. A break above that level would give me further confidence that a low has been struck last Friday. Let's just double check that. I think it was Friday. Yeah. So that would give me more confidence that a low has been struck. However, what I don't like is, and I typically generally track that when we talk about cryptos and the gold market and silver. I would like to see the third wave reach at least the 1.618 extension. Stocks don't need to do that all the time, but gold and cryptos, the assets that I've been tracking as well, I would typically like to see certain Fibonacci extension levels to be reached. Now you take the length of the 1, go to the low of the 2, and the third wave should reach at least the 1.618 extension, maybe more. Similar situation in crypto. I often say they move in very similar ways. When they move very aggressively, and the corrections are very, very boring. That's what they have in common, funny enough. Well, not generally crypto, it's more like Bitcoin, Ethereum, and gold. Silver to a degree. The corrections seem to be very stretched out, and I mean you see that, right? If we just zoom out, you see how stretched out this correction has been. since the price peaked in May. Very, very boring price action. And now we get to a potential turning point. I can only tell you I don't trust it yet. I want to see the wave 2 pullback to support. And if we get the 5, it should top here at some point. I guess if we get a break below the ascending trend line, then I would argue the wave 2 is unfolding. Or something more bearish. Again, I cannot confirm to you that this is really a 5-wave move. It looks like one. I can count it like one. But obviously we use the Fibonacci work together with Elliott waves in order to not just a visual assessment of the waves, right? We want to use Fibonacci levels, and they are based on experience. And we can really only narrow down probable scenarios far enough. I mean, they're never certainties, but we can narrow them down far enough if we adhere to that. And therefore, I can tell you, while I visually can track 5 waves, I don't trust it at this stage. So you need to understand that when you make your decisions. So 5 waves up means the low could have been struck. That's basically the first level of confirmation, but I need to see a successful pullback forming a higher low. So basically that would be an ABC structure. And if I see 5 waves below the Friday low, I mean, then it's anyway invalidated. But at the moment I give it the chance, but I'm very skeptical. And it would need to hold the 78.6 retrace for me. And that level is at, and it might still shift depending on how high we go, but wave 2. Yeah, that level is at 1837. So that I don't trust it. Highlight the box in orange means, to me, it means be on the side of caution. It is, of course, still a tradable setup. I can tell you that, okay? That's not telling you to do it. It's just a setup. It's a so-called 1-2 setup, where depending on your risk profile, you might decide to put the stop below the 78.6 retrace or below the invalidation point, and that's the beginning of the wave 1. Okay, the lower it goes, the better from a reward to risk point of view, and the less it will hurt if you get stopped out. Yeah, that's how I would see this from an optimistic standpoint. From a less optimistic standpoint, I can even count that just as a WXY structure, okay, some kind of a correction which will make another low. So again, due to while it is visually a 5-wave move, I don't trust it at this stage until it has proven to me from an analytical point of view that it's holding a higher low in a wave 2. And third level of confirmation would be a break above this high. Again, I just don't trust it due to the Fibonacci, the proportions, basically, okay. In this fifth wave of wave 1, it can still push higher. Could go a little higher, but as soon as the trend line breaks, I would argue we have a top in place, and we have the 50% retracement level at 1896, which is the Fibonacci pivot point, as well as wave 4 high, critical structural resistance, yeah, at 1896. So that would be an ideal spot to maybe top. Yeah, that's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. If you're interested in daily updates about the S&P 500, as well as selected stocks, here we've got 20 stocks in the rotation, then check out our stocks and S&P 500 service. You can find the link in the description. It's a great community. We started it only last week, and yeah, check it out if you're interested in updates about the S&P. You can also check out the link if you're interested in which stocks are covered. Got quite some interesting ones in there, and yeah, if not, that's fine as well. Enjoy the rest of your day. Have a great evening, day, depending on where you are. Thank you very much. Bye bye.